So let me kick off with this. The whole reason we're here really today is to commemorate our existence as an international business and financial center. We have been in the region obviously for 25 years, but I think our significance and our role is probably more prominent today than it has been before, simply because we're sitting in a region that is growing exponentially. You know, I think it's the ASEAN region is the 7th largest economy after the UK. FDI flows into the ASEAN region is now surpassing that of China. There is a growing middle class that's fueling consumption levels, so everybody wants to be in this region. However, I think intra-ASEAN trade still has some room to grow. And this is where we think we can play a role, where we come to countries like Indonesia, Malaysia, Singapore, the rest of Southeast Asia, and we talk about how we can connect businesses in these regions. So bearing that in mind, I guess I'd like to start by asking Datuk Shin, really, if there was an Indonesian company that had assets or business interests in a number of jurisdictions in the ASEAN region, how can Labuan IBFC play a role in facilitating that business?
Okay. Good morning, everyone. Now, Labuan offers many structures that, many products that you can use to organize and manage your businesses throughout Southeast Asia. Now, for the first thing that you can do is to have a Labuan company, which you can use it for either trading or investment holding to organize your business in the region. Now, the Labuan company basically is a company which is very like the company structures of other common law country. You only need one shareholder and one director to incorporate the company. And the director can be a natural person or a corporate entity. Now, there is no minimum share capital requirement. You can even have one share if you are not a licensed entity. One share, there is no par value of the share also in Labuan. So your share, you can start with even US $1 to start off your company. Of course, if you want to do big businesses, that is not advisable. Now, that is, then you can also, in Labuan, you can opt to pay tax at 3% on your audited net profit. There's no added back or adding back or whatever or disallowed expenses, just 3%. Or if you think 3% is still too high, then you opt to pay ringgit 20,000 per year. And this election can be for on a yearly basis. Now, then you can also use the Labuan company for your investment holding in the region. That means to say you use that company to hold the shares in your subsidiaries around the region and also your properties. Now, investment holding company, there is no tax to be paid. You know, whatever rental income or dividend income that you receive, no tax. And even better, your capital gain on your investment, there's no taxes also in Labuan. Okay. You can also in Labuan, if you have all your businesses around the region, you can use Labuan banks to do your banking, and Labuan banks. I think later on, the speaker may be able to give you more. Interest received from Labuan banks are tax-free as well. Then, of course, just now you have heard about insurance that you can do. You can set up your captive insurance in Labuan to take care of your insurance need in the region. And of course, very popular things, if you're engaged in oil and gas industry, then you may need a lot of equipment. Then leasing is a way to go for doing your leasing business in Labuan. Now, for our, as I said, the tax is one thing. The other thing is that as far as Labuan is concerned, there is no withholding tax on your leasing payment. Okay? Usually when you pay leasing in the other country, when you pay leasing charges, they'll withhold tax. Another good point is if you're leasing your equipment into Malaysia, okay, then the leasing charges payable by the Malaysian company to the Labuan company is also without withholding tax. Now that is 10% to 15% of your leasing charges. Of course, the GST now is unavoidable, but leasing charges, the withholding tax on leasing charges is still nil as far as Labuan leasing into Malaysia is concerned. That's why you can find that there are about 300 over leasing company in Labuan. Now they are not only doing oil and gas leasing, the equipment of oil and gas, they are also doing aircraft leasing. I think AirAsia, Malaysian Airline also do a lot of leasing via Labuan. And, and also ships. You can also lease your ships via Labuan. So as far as Labuan is concerned, no matter what type of business you are in or what type of business you have in the other country besides Indonesia, there is a lot of advantages for you to set up the operations in Labuan for your business.
And Datuk Chin, what are some of the requirements for setting up a Labuan structure, a Labuan company? And can you sort of talk a little bit about the cost of setup?
As I have mentioned earlier, you only need one shareholder and one director to set up a company there. Okay? Usually in the Commonwealth country, you will need 2 shareholders and 2 directors. But in Labuan, it's only 1. The director can be a corporate director. Now, as far as cost is concerned, I think you can set up a Labuan company at the cost of about, for the first year, including incorporation fee and company secretarial fees, at the cost of 2,005 USD. I think if you can find some trust company which bill you in ringgit, then convert into USD, now it's become very, very cheap. I think the exchange rate now has gone down to 3.85 yesterday. So if they bill you in ringgit and you pay in USD, it will be less than 2005. It may be even 2001 or 2002. For yearly maintenance, you need to pay about 1,008 USD to 2,000 USD. That is to maintain the fee that you have paid. You have to pay to the Labuan FSA, which is ringgit 2006, and also some service charge that you are paid, that has to be paid to a resident company secretary, which maintain your registered office and also your filing records.
Moving slightly, deviating slightly, if I may, one of the other concerns I think a lot of investors and company or business owners face currently is this move towards more regulation and greater transparency, which is a great thing, really, when you look at it, and there's no way of sort of evading that. But I wonder how things like the advent of FATCA, the automatic exchange of information, how these sort of regulatory requirements are affecting Labuan IBFC, Datuk Chin.
Yeah, I think it's unavoidable that transparency is a requirement by many authorities. Now in Labuan, of course, our various law has provided for confidentiality, where your information are not divulged to third party. There is no public search at the registry. Now, if you want to do a search, you have to get the approval from the shareholder or the directors before somebody else can go to make a search. Now, this is to provide for where bankers, lawyers who may want to have more information on the company when they take on a big loan and so on. So it's allowable, it's allowed as long as the directors and the shareholders are agreeable to do the search. And beside that, of course, this is the law as it is, but there is also the Labuan Financial Services and Security Act, I think the Labuan Financial Services Act, which will allow the Labuan Financial Services to obtain information on the company if they find that the company is on a suspicious ground. They're able to come into the trust company and take information from them. Other than that, if you want to get information not from the public search, you may have to get a court order, in order to obtain the information from the company. So it's quite confidential, and also quite the secrecy is protected. Of course, if you do something that is harmful, which is not lawful, then of course the law can come after you. Now, not only in Labuan that we have this law, I think now, in every other country, they want transparency. Now, the Malaysia has also signed quite a number of tax information exchange agreement with a number of countries. Now, this basically is to for the country, the treaty country, to obtain tax information on an individual who have done some harmful tax, planning, harmful tax planning. Then we have the FATCA, the Foreign Account Tax Compliance Act of USA, which also require us now to give information to them. But luckily, until now, Malaysia has not signed any IGA with US. So at the moment, the reporting requirement is not there yet. Okay, but I think one day it will come. We don't know. Maybe it's been deferred, maybe for 1 year, but finally it come. Then we have the latest one from the Europe country, EU, is the Common Reporting Standard, the CRS, now, which is also require you to report to them on any information regarding their citizens and so on. So as far as transparency is concerned, we, Labuan, conform to the international standard. Of course, if you have not done anything wrong, then the law in Labuan protect your confidentiality. But if we have done something that is unlawful, then the protection is not provided.
Thank you. And Aderi, I'd be interested to hear your take on this, having obviously dealt with clients. How do we, or how do you ensure their confidentiality? Can you give us some of your experience?
Well, basically, when it comes to confidentiality, sorry, can everyone hear me? Yeah. When talk about confidentiality, I would like to say there's no jurisdiction where you can intend to hide your assets and whatnot. Everyone have to comply with information sharing. Comply, even though like Labuan, we are not, like Malaysia, not an OECD country, but we comply with the OECD conduct. So, meaning which we are moving towards this we call mid-shore jurisdictions. Yeah, what does it mean? It means that we still offer the flexibility of using and like what offshore used to offer, but at the same time we don't compromise compliance with the legal requirement. Hence, in terms of confidentiality, you can't hide. You have to comply, but to a certain extent, like Datuk Chee maintained that no, we don't allow phishing activities where people can still walk in and check who you are unless there's an investigation going on. So by doing this way, I think it will give more assurance to whoever, especially that come to Labuan and set up their private wealth management structures, that they are complying, by using our structures, they're complying with the international standards. But at the same time, they don't have to worry that they will be under tax attack or non-compliance with, being attacked by any of the like FATCA equivalents of like checking on their income or wealth that they've been managing through Labuan.
Thanks, Aderi. Khairudin, if I may turn to you now. I think we were having a discussion yesterday, and you raised the fact that Indonesian companies have no problems and no restrictions getting non-rupiah loans onshore. So I guess my question to you is, how can, within that context then, how can Labuan banks facilitate Indonesian companies that have regional ambitions? What's the role of the Labuan Bank?
Thank you, Sham. First of all, I would like to retract back my comment yesterday, because I just found out yesterday that in July 2015, Bank Indonesia just issued new regulations where all the loans has to be in rupiah, unless you can prove that you have operations that need other currencies. This come handy where Labuan as an offshore center. Before I can start with whatever we can offer or whatever we can provide, I would like to reiterate here, the setting up of the financial institution offshore is not to compete with onshore banking. We are just there to give more flavors, and we are just there to complement the onshore banking. Meaning, for example, if any Indonesian company which have operations in China and dealing with Vietnam, it will be best for the loans to be taken up in Labuan offshore, because one thing we can save on the FX, and the pricing will be very competitive, it will be better. When I say pricing, because we have the access to most of the centers overseas, we can manage the liquidity very well. When it comes to liquidity, when it comes to country premium, when it comes to Indonesia, I know Indonesia have a very high country premium when it comes to pricing. So if the loan is parked in Labuan, there will be no country premium for Indonesia. So they will be a competitive advantage when it comes to Indonesian market if they were to banking in Labuan.
And what are some of the other facilities the Labuan banking industry can offer?
As I said earlier, we are not there to compete with the onshore banking. We offered, we have about 57 players over there. We offered whatever onshore banking can offer. Only that it's not in ringgit, in other currencies. So we have from current account, foreign currency account, trade finance facilities, we have revolving credit, just name it, a buffet of banking products there. But I'm not saying that you can just go to one bank and they offer everything. You have to still shop for the best products or the best pricing in Labuan. Again, we have 57 players. We have a buffet of products, and the pricing can vary. So I think Datuk Chee side may be able to help in terms of shopping for the best or to suit the business.
And Ian, let me come to you. You look lonely there on your own. So we talked a little bit about captives. I think it's safe to say it's not something everybody is familiar with. I think there's a lot of education that still needs to be done around captives, what they are exactly and how they can be used. But I wanted to touch upon, and I think the question was actually raised in the audience earlier. What's the optimal size for a company? You know, what would make it beneficial for them in terms of owning a captive? And if it's not owning a captive outright, are there other alternatives to managing corporate risk?
Okay, thanks, Sham. If you look at captives have been around for more than 5 decades. They start off in America. And if you look at American premiums, you'll be surprised that more than 50% of US premiums are actually captive premiums. But if you look at US companies, of course, they are fairly large. If you look at Asian companies, they are growing. And captives have predominantly been for the large corporates. However, when risk business becomes cross-border, you retain more risk, you employ more people, you have HR issues, you have to look at human resource in terms of remuneration, in terms of medical insurance programs. You can actually use captives as very complementary to your business. And in terms of how effective a captive can be, you need to look at how much risk the corporates retain. So the value of a captive is always relative to your risk. So if you want to put a number, like what Tony has mentioned, the captive sales or rent captives can go down to as low as a premium base of, I think, about 500,000 ringgit. That's about 150,000 US dollars in order to set up a captive. And anything more than that, if there's benefit to the company in terms of retained earnings, tax-free reserves, you can dividend back to yourselves, tax-free, the sky's the limit. And one thing about Labuan is that, as compared to other jurisdictions like in America, your captive premium is only limited to 1.4 million US dollars that is tax-free. But in Labuan, there's no limit as to how much captive premium you can take it from your group into the captive, and it's all tax-free. But in the US, that's capped at about 1.4 million US dollars. So Labuan actually offers almost an unlimited upside, depending on your size of group, size of risk, how much business you have been retaining the risk, and how you want to diversify in terms of risk. Alternative to captive, of course, there's a traditional insurance market. A traditional insurance market and a captive market works almost opposite. An insurance company only writes, let's say, third-party risk. If you have a company like AIG, for example, they don't have AIG assets. They only write third-party risk. But a captive is an opposite animal. It only writes its own risk, its own group business. So captives would then be business groups, family-owned corporations. It can be association-related business. It could be business groups coming together to form their own captives. So that's a bit of the difference I wanted to add. What's an insurance company and what's a captive insurance company? Okay, one more alternative you can do. If you don't want to buy insurance from an insurance company and you don't want to set up your own captive, you can jolly well retain all the risks within your balance sheet. You can do your own asset financing, risk management on balance sheet. But it's a very expensive cost to you, because if you pay a claim out from your balance sheet, you'll be paying out from capital or retained earnings. And retained earnings are post-tax. That's why it's expensive. So if you have a captive or insurance, you can expense it out from a P&L angle. And that makes, if you're keeping it within your group in terms of cash flow, you don't lose the cash. At the same time, you can expense it from your mother balance sheet on a P&L basis. So you actually have the advantage of tax mitigation as well as building up reserves for future contingent liabilities. Thank you.
Okay, and how do you go about selecting a domicile for your captive? Putting tax considerations aside for 1 minute, what makes a domicile attractive for to house a captive?
Okay, captives have a lot of complexity to it. Because you are going to run your own insurance company, mini insurance company that you own it. So you will need people who understand insurance. People who understand insurance work differently from lawyers, work differently from bankers. That's the nature of our business. And you want to select a domicile that you have adequate competence in terms of people to be able to support that. You're looking at jurisdictions that are friendly to be able to support captives as well. If you look at Asia, namely Singapore has captives, Hong Kong just started captives. Labuan captives, they are 40. It has been going on for 15 years. They are cell captives in Labuan. There are also other jurisdictions in Asia Pacific, like Micronesia, but that's very far. So if you want to go in the Asia Pacific region, you have the likes of maybe Vanuatu, Micronesia, Labuan, Singapore, and Hong Kong. These are jurisdictions where there are captive legislations. But captives have always been a much more offshore than an onshore product. So expanding further, you can actually go to Guernsey, You can go to the Cayman Islands, but that's very far. So why go so far? And if you're part of ASEAN, try to look what are the alternatives that you can get in the Association of Southeast Asian Nations.
But what's your experience of our legislation? You mentioned some other jurisdictions, but aside from the proximity, what stands out for Labuan IBFC as a captive domicile?
If you look at captives in Labuan, you'd be surprised. There are a lot of Japanese captives in Labuan. You've got Chinese captives in Labuan. You've got also Indonesian captives in Labuan, Malaysian captives in Labuan. So in terms of the composition by itself speaks that Labuan actually offers an attractive, let's say, efficient, low cost. The policies are clear when it comes to treatments of captive. How do you take it off your P&L in terms of expensing it out? The structures are legal, they are recognizable, you can contest them at law, you have legislation to support that, you've got trust companies that incorporates captives, you've got insurance managers that can facilitate your licensing of captives. And one of the things about captives is that in Labuan, there's always this issue when it comes to offshore center that you must have substance over form. And if you want to have substance over form to benefit from a captive, that means you want to enjoy the tax environment in Labuan, then the insurance manager whom you appoint will do all the work for you. So you don't need to rehouse your captives in Indonesia. You can actually do all your insurance captive processing in Labuan. That's where the expertise, the documentation, the experience, the credibility of people in Labuan that supports captive. I mean, just to add, I mean, I'm here representing the association for Labuan International Insurance Association. I just wanted to add that our association comprises brokers, comprises insurance companies, reinsurance companies, insurance managers, captive managers, and also underwriting managers. What is unique is that if you were a broker in Indonesia and you want to own a Labuan broker, for example, you do not need to house your Labuan broker in Indonesia. You house it in Labuan. So having said that, we've got members within our association. They don't have companies in KL. They only house their business in Labuan. So all the processing goes through Labuan. And these are Hong Kong-owned brokers, Taiwanese-owned brokers, Korean brokers, working to create that substance over form in Labuan. So you can use Labuan as a one-stop center. Your insurance manager can take care of all these services. So I just want to add, just a point of clarity, that if you have just say if you're an Indonesian broker or you want to set up a Labuan broker, you do not need to have that Labuan broker in Indonesia. You can have it in Labuan. Having said that, like for our members from Taiwan or Hong Kong, they don't have to open an office in KL. They can operate through their Labuan entity, but based out of Taiwan, Hong Kong, Korea. Yeah, that gives a lot of flexibility.
Okay, thank you. I would like to open up questions to the floor, but before I do that, Aderi, would you share with us some of the considerations that some of Indonesian clients have when they look at expanding their footprint, across the region? So, in terms of setting up a business or holding their wealth, what are some of the key considerations that they're faced with?
Thank you, Sham. I would like to answer this by relating how Labuan can actually value add towards the Indonesian needs. Indonesia, it is a country, I think, with huge resources, huge potential, especially when we are moving towards the AEC, you can't exclude Indonesia. But what poses a challenge to foreign investors is Indonesia is interacting with the international investors at their own terms, meaning which the bureaucracy, the laws like changing, and you know, for a domestic businessman to move out, you need to work, you know, to have a good interaction with the foreign investors. So, how Labuan can actually assist? When expanding or moving out to interact with them, to ride on the AEC potential, choosing the right jurisdiction to domicile business is very important. For example, within ASEAN, you have countries with a civil law, and you have a common law countries. Where is the best to incorporate investment holding to best fit both parties when it comes to venturing? In Labuan, we do have product where it has a familiarity to the civil law countries. For example, like our foundations is a good investment holding features, and it's, I think among Indonesian they know foundations. But the good thing about Labuan Foundation, you can use it for your private wealth management, investment holding. So there's something extra than the normal foundation that available. So for the common law countries, investors for common law countries, they're used to familiar with like the trust system. So in Labuan, you can incorporate both, and you can structure your venture by using both and structuring at the best towards your needs. The other thing is connectivity. One unique about Labuan is we are a financial center with dual financial system. So we have the conventional system, and also we have a Islamic or Sharia compliance systems. So this is quite interesting for banks, I would say, fund managers who used to operate in the conventional system. They can come to Labuan, they can apply conventional bank, and if they want to tap into the Sharia compliant activities, they can apply the windows, Islamic Sharia compliant windows. This is like a fast way of them connecting to the alternative markets without coming with a pre-committed high cost. Yeah, sometimes you may want to defer your full-fledged Islamic banking license while waiting for the right size or no, with the right right size of transaction. So these are the flexibility that we're able to provide. The other factor that you need to consider is the tax factor. It may not be the only factor, but is a factor that you can't, I would say, exclude it from your consideration moving out and choosing the jurisdictions. I think for the case of Indonesia, I think this year or last year, the government has welcoming or encouraging investment into PPPs model, yeah, to support the infrastructure building, where the participation of private-public partnerships model, and the other one is through the venture capital activities. But one thing that the country is imposing is when it comes to a disposal of foreign ownership in a private companies, there is a special tax, what they call it, withholding tax. They will attract some withholding tax. It's about 5%, if I'm not mistaken. So by using Labuan to incorporate your private funds out of Labuan, whereby the disposals why done through Labuan, actually you can manage the tax situation. Yeah, and the other thing is Labuan do rights on Malaysian DTAs. So we have about more than 70 DTAs that with our counterparts, and whichever businesses that have their trading companies or holding companies in Labuan will be able to enjoy the tax treaties that we have established. And finally, choosing a jurisdiction that can give you access to talent is very important. Yeah? When you want to grow your business, you need talents. For Labuan, some activities we allow co-location, like banking, insurance. You can tap into onshore market in terms of getting the right talents to grow your business. The other one that I forgotten was treasury management, your financial management. When choosing and going out to a jurisdiction, you need to know, you must work with a workable ecosystem that can serve in terms of provide you with the financing to expand. Like, Khairudin is here. One of the examples of Maybank, he's committed to give their buffet offerings. They also mentioned just now. So Labuan, you're able to tap the banking system. You're able to tap the capital markets. You can look into like issuing your sukuk, your bonds. You have the banks to actually lead arrange the transaction and to syndicate the financial transactions. And the other thing is also complementing to financing is the risk management. Yeah. So we have the total offering to actually assist Indonesian players to come to Labuan and to start and get your platform incorporated.
I'd like to pick up on something you said and throw it to Khairudin and Datuk Chin. One of the unique features, I think, or that we've seen in this region is that a lot of the business owners, a lot of the companies in this region are family-owned businesses. So, which means there is the consideration of the public, how to manage their public wealth as well as their private wealth. So my question to you is, do you get a lot of cases where you start off with a corporate structure, which then flows into a private structure? So, for instance, a family-owned business that is looking to expand in the region may also want some solutions out of Labuan, possibly, to structure their private wealth needs. And if that's the case, how can they get all of that through Labuan IBFC?
Okay. In order to structure your private wealth or even the assets, the business succession plan, I think the structures that can be used in Labuan, there are two. One is the well-known trust structure, where you can set up your trust. The sector law will appoint a trustee, which is usually a trust company, to set up a trust whereby he will transfer the assets into the trust structures, and the trustee will then either manage the assets for them for the benefit of the beneficiary, or the assets. The trustee can also appoint assets manager to manage the assets. Now, of course, in this case, the sector law will have to trust the trustee. Now, in Asian mentality, usually they don't trust the trustee. And for that, there are solutions to that. One is, of course, you appoint a protector. So before the trustee can do anything to the assets, then they have to get the permission of the protector. So because of that, I think in Labuan, the trust do not have a limitation. I think that the perpetual period is 100 years, but after that, you can still set up a new trust to take over. Now, because of this thing, I think trust in Asia is not that popular. And because of that, I think the Labuan FSA in 2010 has introduced another structure, which is the foundation. Now, foundation, as you know, started off in a civil law country in Liechtenstein. And we take up that. Foundation is the hybrid of a limited liability company by guarantee and a trust. Now, in order to set up a foundation, the founder will have to endow the assets into the foundation, and the assets will belong to the foundation. The foundation is a separate and legal entity. It can be sued. It can sue and be sued. So, and he has perpetual succession. So there's no problem of a limitation of 100 years and so on. Now, the founder will draw up a charter and register with the FSA in order to set up the foundation. Then he also appoints the council member and also officer to manage the foundation. The assets are registered under the name of the foundation, so there is no problem of don't trust the trustee. This one, you put it into the foundation, then you have to trust your council member and the officer to run your foundation. Now, all this will be for the benefits of the beneficiary. There's also, you can name the beneficiary of the foundation who is going to receive the proceeds should there be a distribution. So this foundation is also very suitable for civil law country. in Asia, in Southeast Asia. I think countries like Indonesia, Philippines, and so on will be very suitable for you to use this as a succession planning and also asset protections. Now, another use of the foundation is, of course, for charitable purpose, and you can use it to set up a charitable foundation in order to, donate, to collect funds and also donate to certain people. But the setting of a charitable foundation, you have to be very careful. I think there's other conditions to be met. I think FSA will not simply allow for a charitable foundation to be registered in Labuan. So that is how the entrepreneurs in Asia, after setting up the structures in Labuan, they will look into the private side. The structures they use is, of course, trust and more now on foundations. And for the foundations, I think even the Malaysian can use the foundation to hold the assets. The foundation can own the shares of the company in Malaysia, and that will not involve Malaysian tax. Only the company in Malaysia will have to pay Malaysian tax. When the Malaysian companies distribute dividend to the foundation, there's no further tax in Labuan for the foundation. So this is the best structures that we can see for the management of and succession planning in Labuan for Asian people.
And Khairudin, what are you seeing? What kind of trends is Maybank seeing in terms of, corporate clients having a spillover effect from the corporate side to the private client side? Are you seeing take up for more structures like foundations and trusts?
Thank you, Sham. Frankly, banking industry in Labuan, we have not been experiencing demand for private wealth, but since 2014. There were a lot of questions, a lot of demands for private wealth. Banking industries in Labuan, they have started to bring in products, private wealth. Normally, it works this way. For example, CIMB have present in Labuan. So for market in Indonesia, CIMB Niaga will play a very important role to onboard their private wealth customer, and they will introduce Labuan as an alternative. Maybank have started the initiation with our private wealth, where there are a lot of inquiries when it comes to offshore wealth management. So I'm not saying that private wealth is established market in Labuan, but we do have banks that offer private wealth product. And there are more banks starting in initiating the private wealth product as well as services.
So at this point, I think we can open up to questions, if there are any. Yes.
Yeah, thank you. That was very insightful. I would like to know, as I understand, there's a different tax regime if you have a holding company or if you are involved into trading. Now, could you possibly combine those two things to one activity? More questions to follow, sorry. Or do you want one by one? Okay.
Now, if you're carrying on trading activities, the tax is either 3% of the net audited profit or 20,000 ringgit per year at your elections at the beginning of the following year. Now, the significance of 3% of net audited profit is that you have to prepare an audited account, okay? And there is no more, they just look at the bottom line, 3%. Unlike other tax legislation whereby even the bottom line, then you have to add back disallowable expenses and things like that. So that's very simplified. Now, for investment holding company, 0%. Okay, but if you think that, okay, I want to save some money, I want to combine two of them, sorry, then you will be considered as a trading company, and you pay 3% of the net audited profit.
Okay. Okay, the next question would be, so I understand like a negative list, like you have it here in Indonesia for foreign direct investment, is not existent. You can pretty much do any activity you would want to have, and there are no constraints for foreigners to own that. And then if you do that, how laser focused do you have to describe your activity? For example, would it be enough to call yourself a consulting whatever company, or do you have to closely describe what you want to do and need some kind of license for that?
You're talking about what business again? Can you repeat the part on the consulting or what?
Yeah, well, I was comparing it to doing business here in Indonesia and setting up a company as a foreigner here. Now, if you want to do that in Labuan, here in Indonesia, you face a negative list and you have to clearly define what kind of activity do you want to do. Is it allowed? Is it not allowed? And you have to really laser focus, describe what you want to do. It would probably not be enough to just say consulting, for example, but you have to go more into the details. Now, how is that in Labuan?
Let me enlighten this question. Actually, in Labuan, we don't have like a negative list here. I mean, for the benefit of everyone, negative list is a list where it specifies what foreigners can venture into and what the limits of, and foreign investors can venture into Indonesia. In Labuan, we don't have that. We don't have restriction on foreign ownership. We don't impose any currency control. So a foreigner is free to set up their investment holding company. But if they want to venture into the next country, it will subject to the restriction imposed by the country they're going to invest. So for example, they're going to invest using Labuan holding company to invest into Malaysia. Then you have to comply with the requirements set by the Malaysian government. So for Labuan, you are free to use, anyone can set up a holding company, investment holding, and you can use that to do your investment around the world.
Okay, and we are 8. As long as the Labuan entity is carrying on lawful business that is in Malaysia, you can do it also in Labuan. Lawful and not immoral, lawful. You can do any type of business in Labuan as long as it's lawful in Malaysia itself. Whatever they can do in Malaysia, can do in Labuan.
But do you have to put together a detailed business plan, describe the nature of the business that you're operating?
A normal Labuan entity, you do not need to. But if you are applying for a license, like a banking license, leasing license, insurance, Labuan International Trading Company, yes, you do need to put up your business plan.
I'd have one more question, if I may. Okay, sorry. So if we assume that a private person would set up a corporation in Labuan and then would choose whatever tax regime they prefer, or let's say they takes a down payment of, how much was it, 20,000? And then that person is a resident of a country where he has to declare his world income. Now, how would that connect if you just do the down payment, no auditing, but then again, where you are residing, you have to report your worldwide income as a private person?
I presume you will carry on this type of business via a Labuan company or any partnerships. Now, if you are carrying on with a Labuan company, it is a Labuan company that pay the 20,000. Now, after you pay the 20,000 tax, then whatever left behind, you can declare it as a dividend to the shareholder. You will be the shareholder of the company. So, however, whatever you want to, I think that is tax-free. After paying the 20,000, whatever left is paid to you as dividend is tax-free. Now, how that dividend is being taxed in your home country, that you have to comply. Let's say if you come from Singapore, you receive the dividend offshore, you may not have to pay any more tax. But if you're a US citizen, I think, sorry, you have to pay. Okay,
but it might force you into some kind of auditing, even though the Labuan legislation wouldn't demand it, but because of your final destination of the money, when you're taking it out private, it might still be advisable to have that enforced, right?
Yes, you may want to get it audited, but I mean the requirement is not there. But you can have your account audited. Even let's say you have a Labuan company which is in a loss situation, and you may not want to pay the 20,000 right? So you have to get your account audited so that you have a zero or negative or even a loss in your account. So that 3% on a loss or a zero will be zero also. So you need to get your account audited then. Yeah.
Thank you. Any more questions from the floor?
Hi. Probably just to add on to the question raised by the gentleman just now regarding the repatriation of profit or dividend back to private individual who are actually citizens of a country that impose worldwide scope as a taxation system. For such situations, it's very important to choose jurisdictions that they have a wide coverage of double tax agreement, because as a private citizens of jurisdictions that impose worldwide scope of income, whatever income that you receive worldwide will be taxable in your home tax resident country. And the only way to get rid of it is to tap into the double tax agreement so that you can enjoy or you may claim some tax credits on those which has been negotiated between the countries. So it makes a huge difference by comparing Labuan to other offshore jurisdictions. As I think the presentation this morning has mentioned that Labuan has more than 70 double tax agreements with the countries in the world. So these double tax agreements has clearly spelled out the treatment of the dividend received from respective countries. If you look at the countries that impose worldwide scope of, if you look at the countries that adopting the worldwide scope as a tax law or tax systems, those countries are like US or even India or China. These are the major countries. So, and these countries are actually having double tax agreement with Malaysia. And if you compare to other jurisdictions, low tax jurisdictions, you will notice that they hardly have such double tax agreement with those main countries who actually adopted the worldwide scope tax system. So I hope this will actually add on to the explanation by the panels. Thank you.
Thank you, Sue, for the very useful information.
Yes, the use of double tax treaty can actually lower your dividend income received. That is only applicable to those countries that do not have a worldwide tax. I think Malaysia does have a double tax treaty with USA, but that only covers aviation and shippings. They do not cover profits and dividends. So as far as US citizens is concerned, sorry, you still, even with the double tax treaty agreement, it will not reduce your tax as far as the US is concerned, the double tax treaty. Malaysia and Indonesia does have a double tax treaty agreement, but it has to be used very carefully. I think Indonesian tax authorities are looking at revising and very closely as the Labuan company for the use of double tax treaty agreement. So you are advised to use it with care, and I think you must establish management and control as well as substance in Labuan before you apply the tax treaty benefits. Other countries that have denied the tax treaty benefit includes Japan and also Korea. So you have to be very careful. It's not that you cannot use it. You can use it, but use it with care and also with proper tax advice. That's just why I'm not talking about it, because you need expert advice before you really go into it. If not, you will run into trouble. Even within Labuan and Malaysia, a lot of people are running into trouble because they do not have proper tax advice. Okay? Take care.
Right. Another question from the gentleman. You have the same question. Any more questions from the floor? Kindly raise your hands. Well,
Okay, well, I guess with that, we conclude today's event. I'd like to thank our panelists. Thank you so much for your views.